crypto market is at a point where it's a little bit boring. But if you actually look at things, it's at $1.2 trillion. Yes, great, agreed. And then you actually look at the news, you're like, okay, it doesn't look boring at this side of things. It doesn't actually look anywhere near boring when you actually understand how these companies are building and what's coming towards us. So now you do understand that the perspective of central bank digital currencies coming out is here, and it's not going to be one platform which is going to take advantage of that, because these guys are talking about multiple CBDC bridges. I'm not saying XRP is going to win all of it. I'm saying there is going to be competition and it's going to be great. Why? The target market is so big, even if we just get 5 to 10% of that, it's going to be a win-win situation. So you have the XRP, the XLM, the XDC, the Quant, the HBOT. A lot of these payment projects are actually going to come up. You have small coins in the space, the small caps like Virex token. All of these are payment focused. They are going to take a little bit of this market. Some of them are going to eat the big part of the pie, and we will see them breaking higher. So the fundamentals does suggest you some complicated thing, especially for ETH. This doesn't actually look good in any way. Now, if you actually look at the other side, why we look that deep into XRP, it does look a lot greener than what we are talking about in Ether. Now, yes, the macro is there. Yes, we need to understand why things are evolving like this. Yes, we need to understand what the price action is showing us. So we'll actually break these down, because if you look at dollar, it's going up at a time when the XRP is slowing down, at a time when Bitcoin is at a resistance zone, at a time when Ether is in a channel. So we're going to break this down here now. Welcome to the Scientific Investor family, where the normal retail guys get to learn how to become the next top 10% of this world. Now, if you actually look at the market, you'll actually observe the fact that there's not much of these assets which are actually doing great in last day, last week. Some assets show you like, okay, they've actually done pretty well this day. They've actually done pretty well over the week. Say some of them, if it's me, when I'm looking at it, I'm like, I'm concerned. Say if it's FTT, I don't even want to touch that shit, right? I'm concerned. So it's up 95%, but as an investor, as a trader, if you're not comfortable with something, it's going to be really hard. Then you see another asset here, Bitcoin Cash. It's up 85% for this week. And if you actually go back to our call, which we were having, we gave this thought process, it's going to bounce off. Then we had our breakout call. Now we are already at our target. If you actually look close to where we were thinking about our targets, it was 262. And right now you go into the price action and you actually see that that asset is close to 60 already. So yes, in that 85%, you didn't get the entire 85%, it's like 60%. But that still is great, because not a lot of assets are doing that in the top 100, in the top 200 right now. Yes, you do see Compound doing another 70% over this week. But what's the catch there? We actually had this follow-up here for the comp. We actually gave this thought process like, okay, we're going to see comp going towards 58 and then slow down. That's going to be a level of resistance which we are watching. And what happened? We actually went up. In 3 days, we hit that particular level. So if you actually look at the price action, now it's at 50. It already went up to that level of 58 and then it got rejected. Why is that? Because you do have some level of resistance where either the buyers who bought at this bottom or the breakout, they are taking profits, or sellers are entering this market. So it actually needs to be followed up so you'll understand where the opportunity lies. Now, is that it? No, we do have some more assets which are starting to look more like the Compound here or the Bitcoin Cash. And I'm actually going through all of that in the group here. So if you're interested in these short-term moves, which is risky actually, but not risky like these small and micro cap assets when you follow them with low volume. These are the assets where we are trying to limit the risk, but it's crypto market. You still have a lot of risk. So finding this opportunity itself takes a lot of time. But once you have them in front of you, and the target, you have an edge in the market. So now, jumping back into what we were discussing. Think about this. Now you actually have all these financial giants going for the decentralized technology, an asset which they have a say on without all these banks. Now, why is that? Because we're literally watching this evolving in front of us at a time when central banks are saying we are going to do another couple more hikes. We just saw what the UK did. We just saw what the Norway did. There's a long list, I would say, of central bankers who are actually tightening the policy again and again and again. For some reason, they're enjoying this drama, right? But you actually see banks getting hit hard. You actually see the economy slowing down. You actually see commercial real estate space getting hit hard the most, which will actually affect a lot of smaller banks. But now for us who are looking at these assets, we're watching that the XRP price is slowing down. We discussed about this possibility, followed it up every now and then, giving you the right thought process. Even earlier today, when we were looking at the shorter horizon charts for Bitcoin, we actually told you like, okay, I think we're going to break lower when we were at this point. It broke lower. Then I told you, okay, I think we're going to retest this and get rejected. We came back up, we got rejected, we came down. Now, if you actually look at those posts here in the group, you'll actually see like, okay, this is why I was saying that the short-term RSI, it actually broke lower. We are looking for this. This is the possibility. This is what we are looking at. The double top was coming in. All of that is now true. We actually saw that double top coming in. We actually saw the break lower. We actually saw a retest and rejection. Now, if you actually follow that price action, you'll actually watch that money is moving in and out of the market. And that's where you see when Bitcoin is slowing down, some of these assets are actually getting money from that move. So if Bitcoin is about to get rejected and come down to 30,000, that's yes, only $400, $500 move in Bitcoin, but the amount of liquidity going on to few the assets gives them room to run, and that's what we are watching in these assets which we have discussed. Some of them are actually doing like 50-60% over the week. Some of them are actually doing a little bit higher than that, but the vast majority of them are not doing that. So it's really important for you to understand, if you are looking for these opportunities, then it does make a lot of sense to actually have the information on which of these coins are looking similar to that of Bitcoin Cash or the comp or the other couple of opportunities which are existing in the market. We are actually following that up right now so that you guys have the edge on it. Now, when you actually come back looking at Bitcoin, you will have to agree that it actually looks a lot of similar. There's a lot of similarity between XRP and Bitcoin right now. You can say either Bitcoin is following XRP or the other way around. Mostly we would agree with the fact that, yeah, Bitcoin is moving the market. Now you take all of this out and look at the short-term picture here. It does give you an easy idea that we are coming back, retesting this range. So if you are getting rejected here, it may not look good. So yes, that's a 15-minute chart. There's a lot of noise. There's a lot of volume for sure. And that's when you actually take things a little bit seriously. You slowly go back out, zooming out onto a 30-minute chart, onto an hourly chart, 4-hour chart, daily chart. You zoom out step by step. Now, why is that so important? I do that because I actually understand the range. First, I understand what's happening in the market. Second, I get to see the range. So we are range bound from a few days here, over a few weeks. And the top here is like 3,800 and the bottom is like 30,000. So unless we break above this range, there's nothing big of a movement here for sure. So to get certainty, what I would say is come on a daily chart. Look at this. If you're watching this, you are like, okay, this is the range, the top end, where you actually see short-term movements and the price is inside that resistance range. It's a really important range. Why? Because that goes back all the way, right? If you actually follow this particular range, you'll actually see it coming from last couple of years. So now when you zoom into that and look at that, you're like, okay, what am I really looking at? That's like 31K at the top as a resistance and at the bottom close to 30. So if you actually see a break to the downside, that's not good. But if you actually see a break above this level, say 31K and a candle close there, that's massively bullish. Now, what if it actually breaks to the downside? That's a positive and valid question. Now, why is that so important? I would say if Bitcoin breaks lower, all coins are going to take a hit. So, what are we looking at? If, say, in case Bitcoin actually breaks lower, you do have a trend line which we haven't resisted after this massive breakout rally here. So, that's still pending. One. Two, you made this level of support resistance zone here, which was active, and then you broke higher. So even if you are a guy with the trend line or the horizontal support resistance, you have this level which is active around 27,500 towards 28,000 to retest. Now, we know the fact that Bitcoin usually gives this void there. It breaks through that level, it comes back down, but it does not always come back to the exact same point. And historically, this stands true. Why you go back in history, you actually see things like this, where we actually break higher sharply. We don't actually come back and retest at that time. You go higher, put in new highs, and then after a long period of time, you decide to come back and test that range. So either now or after some time, we're going to see that level of retest. But think about this. If this price goes all the way back up to hit $80,000, $90,000 and then come back down, does it actually matter? Because that time you're looking at a bear market, the real giant bear market. Because you know the fact that dollar is stable, it is slowly trying to do something. We had a couple of green days, the positive news for the bulls, because we got in a double bottom, and then as we discussed, we're grinding to the upside, testing this particular resistance right now. So on the macro side for the dollar here, if it's of your interest, you need to understand that we are at a macro level of support. This is an important range because that particular range shows you all these level of supports staying valid. And if you're able to bounce off from this level, breaking through this level of resistance, now that kind of raises a lot of concern, because on the other end, you may actually see this breaking lower, say the oil. So the macro side of things get a lot more dirty. Agreed, that may not look great for the economy. And that's where we are actually looking at the stock market side of things, right? Then is that. While you actually take a look at it, it is more or less like, okay, you're still here. You actually made a rounded bottom pattern. You broke higher. It does look bullish. But the primary question here is like, okay, if that's so bullish and Fed is actually doing some more rate hikes, what would that actually mean? Because right now, the market is trying to price in the Fed pause, meaning they were actually thinking about, okay, maybe we're going to get a hike, 25 basis point. The market priced that in, then we were slow, after which you actually got a pause. So the market is now pricing that in and pushing the market up. But on the short-term leg, we're actually watching this. Now, one of the primary things I would like to say to you guys is don't fight the market. If the market is going to the upside, don't fight that trend. Let it go to the upside. That's what we want to see. And that is where one of the most important things come into picture, which is for the crypto market. When you look at it on a weekly, this is what you're watching. So basically, for anyone who has been caring about these charts, this is what you're watching right now. This is where you are at. Right now, you're here. So if you do think that this point is bullish, this point is also bullish. But that's a weekly chart. So for this to actually play off and to go through the roof, you may need to actually give 4 or 5 weeks to see a breakout, then another 4 or 5 weeks for this to actually take off. So having patience is going to be the most important thing for sure, just like every institutions and investments you're going to make. Now, if you actually take that same perspective here into XRP, yes, short term, you're still looking at that support level. We are talking about this from a couple of days. We're watching the price slowing down and going down. This is more important because if you're following the price action and you're interested in understanding where to buy more of this asset, it can actually come back down to 0.4. I mean, unless you actually get a massive bounce off from this particular level, which I think now the candle shows last day was an inside candle. And last few days, whenever you got such a candle, you got next day as a bearish one again and again. So most likely we may get another one here, which actually goes towards 0.44, 0.43, or even a bear candle like this, which can actually come up with a lot of volatility and then end up somewhat negative. So still, you may see the price action coming back to 0.42 to 0.4. It may not actually look much bullish at that point when the price is dropping. You literally have to zoom out to the macro level to see what you are doing. Because unless you break this to the downside, you don't have to go negative. You are right now at the support level where you have been bouncing off from a long period of time. But now the question becomes like, okay, you've been bouncing off from this level. You managed to put in a new high here, but right now you haven't actually put in a local swing high for the RSI. So that's where a little bit of concern comes in. But then you're focusing on the price action. And the price action shows you that it put in an engulfing candle last time before it actually went up. So right now, most likely this is going to be a retracement, and that's going to be a short-term scenario. So you can actually use the fib to see that short-term reversal. So you can actually see what this run-up looked like and say where we are right now. So if the price decides to come back down towards 0.42, 0.43 range, we can see that we are heading that 0.786 range. That's okay. And then we want to actually understand, okay, last time when we went up, how low did we come? We came close to 0.786 and then bounced off. So we are watching the price action and we do have some room for correction because Bitcoin has not moved out of this range. It's super important to understand what Bitcoin is doing right now, because if that breaks to the upside, you're going to see a lot of these altcoins doing what these couple of assets did in the large to medium cap assets. Now, yes, for sure, you can actually go into 300s, 500s, or even the 1,000 range of the crypto market where your daily volume kind of fade off for sure. The market cap kind of fade off for sure. But yeah, for sure, you're going to see some of these assets doing 40, 50% on a weekly basis. And some point you'll actually even see this. But the amount of liquidity you have in those assets and the level of risk which you are going to be taking is going to be super high. Some of these would be like this. There is no volume. Literally, you can get stuck inside that asset just because you see them growing higher, breaking through some levels, doesn't mean you can actually literally take that off the table. You need the liquidity, right? That's why we're actually focusing on the large to medium cap asset, even if you're not making that 300% move, which you cannot take out. If you're getting 60%, I think that's strong enough. And if you're interested in those kind of things and regular education based on the market, the macro, and all the understanding for the crypto market, you can look at the Patreon. The link is given in the description below. So guys, if you received value, please do hit that like and subscribe button. I appreciate that a lot. I'll meet you guys on the next video. Bye for now.